Bill Rayman, guaranteed rate, Los Angeles. A common way of dividing loans into categories is one that most people are familiar with the terms, which is conforming loan and a jumbo loan. So let me very simply explain what that means and how it impacts your decision. It's up to each individual bank's choice, but most banks will want to sell the loan that they give so they recoup their money so they can lend it again. If you go to a Wells Fargo and you get a loan with them, the odds are strong that Wells Fargo is going to want to sell that loan on the secondary market to recoup its funds so they can lend it to the next person. That secondary market in America is 90% controlled by, or the secondary market really is the combination of Fannie Mae and Freddie Mac. There's been a lot of talk about what's going to happen to Fannie and Freddie in the future. Their position changed after the downturn in 2007. There's some people who want to get rid of them. There's some who recognize they're doing a very valuable thing. Regardless, they exist today. And that's where you get the term conforming. So if the bank feels that they can issue a loan and they are confident because it meets the Fannie Mae or Freddie Mac's guidelines, then it conforms to those guidelines, and hence it's a conforming loan. The single most important variable that determines whether it's a conforming loan, besides all the other issues of property and employment and income, is the size of the loan. Throughout the country, a conforming loan will be up to $417,000 for a single unit property. That could be a single family residence, that could be a one-unit condo, that could be a townhome. It's one unit. If you're doing a 2-unit or 3-unit or 4-unit, that $417,000 increases. So a 2-unit, it's $533,000, and a 3 units more, and 4 units more. So if you go to a bank and you have a loan that's $418,000, that does not conform to Fannie Mae or Freddie Mac's guideline, the bank can sell to them, you have a non-conforming loan. Once you're over that guideline, you're now in jumbo territory. Jumbo just means you can't sell it to Fannie and Freddie. There might be other markets they could sell it to, and certainly overseas markets buy up our mortgages. But now when you're in jumbo market, each lender has the right to make their own guidelines. Are we going to do this loan, or do we not want to do it? Does it meet our specifications? They're taking the risk on it. They might not sell it on the secondary market. Several years ago, Fannie Mae and Freddie Mac recognized that throughout the nation, there are some areas where the average income of the population is higher than in other parts. Common sense. So they established a middle ground. If you have a loan up to $417,000, that is a conforming loan. However, depending on the county within which the loan is being done, where the property is, they will allow banks to do a higher loan amount. These are known by different terms. I've heard high balance conforming, agency conforming, agency jumbo, where agency rep means Fannie Mae and Freddie Mac. Here in Los Angeles, they allow a boost of 75% to that $417,000. If you do the math, 1.75 times $417,000 is $625,500. So now you have a situation in Los Angeles, if you have a loan of $620,000, a given bank can still sell that to Fannie Mae and Freddie Mac as a conforming loan. It just falls into a category called agency conforming or high balance conforming. Still, they will buy it. Next to Los Angeles County is Orange County. Same thing. They have a high income. They'll go to $625,000. An adjacent county is San Bernardino. Not so good. Their jumbo loan is $417,000. There is no add-on to it. So throughout the nation, depending on your county, you might have the 417 be the maximum that can be done before you go to jumbo. Sometimes there's a 25% add-on. sometimes at 50%, and the maximum is a 75%. So the value of knowing whether it's jumbo or conforming isn't something a borrower necessarily has to be concerned about, other than the banks and the guidelines of those banks are different. And so you want to know what they are before you go in, because the qualifications for each loan can be very different. Quick example, I can do a loan that I'm going to sell to Freddie Mac up to close to a 51% debt to income ratio. This would be considered quite high. I can't do it all the time, but I can do it sometimes. However, if I'm doing a jumbo loan, a loan that the bank is going to keep, I don't know any jumbo lender that will let me do a loan over 43%. So there's an unusual aspect to jumbo loans now. And by now meaning this particular time in the market. Really, since the crash, it's been a topsy-turvy world. Traditional relationships between the stock market and interest rates, between bonds and stocks, between what's going on in the world, the economy, have sort of been called into question, if not set aside, because they no longer seem to hold. In particular, in the past, you would think, logically, that the more money you're going to borrow, the riskier it is for the lender. Therefore, the higher the interest rate they're going to charge. And for most years, that made sense. So if you had a conforming loan of $400,000, you would expect you would have a lower interest rate than if somebody had a $1 million loan. The strange thing is, we're in an inverse world now. So many lenders around the nation have recognized that the wealthier, higher income people are often a better risk. They had lower default, they had lower bankruptcies, that there are more lenders looking to do loans in the jumbo category. And like any other competitive situation, that's actually forced the rates down. So in a market where you might have a $400,000 loan today at 4% for a 30-year fixed rate, someone with a $1 million loan for the 30-year fixed might actually be at 3.625 or 3.75. It sort of, I think, fits into that rather annoying category of the people that have get more. Fortunately true. Because of the size of our company, we have relations with the banks so that I can very often use a bank's jumbo pricing even if the loan isn't jumbo. I have to meet jumbo guidelines, which can be more strict, but I can access that pricing. So I might have a client with a $500,000 loan and I will get them jumbo pricing, even though in California that would be considered a conforming loan. I'm happy to spend time helping you understand these things, and in turn, I think you'll feel very comfortable referring your friends, family, co-workers, neighbors, whoever, because you'll know that not only did I give you good information, your experience will back that up, but I'm also going to be able to help you with, if you need professional attorneys, taxes don't look right, financial advice, insurance. I want to be the hub through which you use this for information. The way you treat your doctor or your lawyer or your CPA as lifetime members of your professional advice team. That is how I am for many of my clients. Anything to do with real estate or finances, they can come to me. You will when you want to buy your next house, or you want to buy a guest house, or your child wants to buy a condo instead of living in a dorm in college. You'll be comfortable referring people to me because based on your experience, you know the information I gave you was good and you were able to make optimal decisions to your best interest, which is really what I think is defined as you're going to make decisions that make you happiest. And I'm happy to help with that.